Winners keep winning. That's something we learn over and over again in investing. And I think Alphabet or Google is going to be a continual winner in artificial intelligence. We got news yesterday from Bloomberg that they are looking to sign potentially a tens of billions of dollar cloud deal with Anthropic. Anthropic is arguably one of the best model makers in the world. I think the three key leaders in the US are Google with Gemini and their other apps like Veo, and also OpenAI and Anthropic. There are other players in the market, obviously, especially coming from China, but those are the three big players. Google has already invested $3 billion in Anthropic. That was actually quite a while ago, so they got a pretty big stake in that company, now worth tens of billions of dollars, just that stake alone. But the bigger deal could be the fact that Anthropic is building on TPUs, is going to be potentially building even more in Google Cloud. That is where there's real financial potential for Alphabet and Google to own this space, because they've got their own business. And then if other leading companies are building on top of their products as well, puts them in a phenomenal position. I'm going to dig through exactly what we found out, how this may impact their financials. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give their top 10 stocks to buy right now. Let's start with the reporting. And this is from Bloomberg via Reuters, Anthropic and Google in talks that could be worth tens of billions of dollars. I've seen different reporting here. I've seen one that said $1 to $10 billion. $1 billion deal is big, not all that big for these two companies. But it sounds like by the end of 2025, Anthropic is going to hit its goal of about $9 billion in revenue. If you're doing that kind of revenue in AI, that means you need a lot of compute. So where does that compute come from? Well, some of it at least comes from Google Cloud. Anthropic, this is 2023, partners with Google Cloud. This was about the same time Google actually invested $2 billion in the company. In total, they have invested $3 billion in the company. So Anthropic is tied to Amazon, but Amazon is kind of a smaller player when you look at the artificial intelligence cloud companies. Google is much bigger. That's why they're potentially looking at Google. It also keeps you away from being tied to NVIDIA. And that is something that I think we need to keep an eye on going forward. Google really has the only alternative to NVIDIA's chips. And so if you're building on NVIDIA, NVIDIA is taking a 75, 80, 90% margin on those chips. That's very expensive to be able to buy those chips, be able to buy them profitably, run them profitably at these other third-party cloud companies. So the vertical integration that Google has built in its cloud is starting to be a differentiator. We learned this week that some of the talks between OpenAI and Google actually led to some of the investments that NVIDIA made in OpenAI. So there's a small number of companies here. They're all looking for pole position. The big difference for Google and the company, the reason that I am invested in this company, is the growth that they have in the cloud and the financial wherewithal they have. So let's start with that financial wherewithal, because I think this is important when you're looking at who's going to be able to afford to build out all of these AI tools. I have said for a long time that Google is going to be able to bludgeon the competition with their cash. $95 billion in cash as of the most recent quarterly report. We'll actually get them their report in the next week or two. $23.6 billion worth of debt. So there is a little bit of debt on the balance sheet, but the net cash position is very, very strong. And despite the fact that they're pouring tens of billions of dollars in this AI build out, still have $134 billion in cash coming in from their operations. So that's cash that just keeps coming in year after year after year. They're going to be able to continue investing in the cloud. And that cloud revenue is now a huge revenue growth driver for them. $49 billion over the trailing 12 months is now solidly profitable on an operating income basis with $9 billion in operating income. I think those margins are going to improve pretty significantly over the next couple of years. But even signing a $10 billion deal with Anthropic over the next few years is going to be meaningful for Google Cloud. And if they can sign an even bigger deal, have the backing of, they could get the benefit of having one of the biggest labs in the world building on their cloud, not to mention all the things that Google is doing itself with artificial intelligence. So I just simply love where Alphabet is sitting. I think the stock is still extremely undervalued. As we're recording here today, shares are trading for 26 times earnings. That's not the cheapest stock on the market, but it is a below market value price to earnings multiple. And I think the growth potential for Alphabet is just too good to ignore. So the risk reward here is just phenomenal for investors. That's why I continue to be a big shareholder. But let me know what you think about Alphabet's position in artificial intelligence. I think, along with TSMC, these are the two best plays in the market today. But what do you think? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.